Hello, Integral family. Last time I did a chop it up session with the agent, we were in Amsterdam. This evening, I'm in Fort Lauderdale, Florida. I think today's purpose is going to be a quick recap because last time it was like, end of June roughly? And now we're sitting into end of September. It's almost like a quarterly wrap up, I guess. Maybe I should make these quarterly. But let me know what you think. Make these quarterly, or maybe even make them like every other week, something like that. I wanted to talk about the markets right now from that point in June into recent. For that point in June, I think we were trying to break out of all-time highs post the tariff drop. And then we had some light turbulence breaking out of the all-time highs top. But from that instance, it just went straight vertical. It's crazy because I'm literally looking right here. No, I gotta show y'all. No. Hold on. There's a whole peacock on the roof of the spot that I'm staying at. Do you see this? Nah. That's what we saw, right? We saw a huge opportunity in the sense where, markets were finding a way to take into all-time highs. More and more headlines came out and more, positive sentiment pushed it, continued up, right? Because some of the problems that we had, or the questions that we had, were the fact that, hey, we don't know what tariffs are going to look like right now. Are we going to start to see the tariffs in the inflation data? Is it going to be in the consumer data where maybe they're not spending as much? Are they going to be in the inflation data where the price of goods is going to start to see an inflation price for us as consumers? Like what all in totality is going to come from it, right? So at that point, I think I strategically just kind of placed certain bids that have kind of come home to roost a little bit. That was the main thing I was looking at. I was looking at the NASDAQ, like allowing the triple Qs to potentially to appreciate at a high rate, a higher rate than the S&P 500, just because of its tech heavily concentrated exposure. That alongside the fact that, hey, this AI narrative is going to continue to build upon itself, and names like NVIDIA and all the other ancillary names around it are going to continue to be able to appreciate, and the perception of that appreciation is going to continue. We've had insane growth overall, great names that I've been able to mention, as well as names that I've taken L's on too, right? Like Toast. I took an L on Toast as thinking that was going to be a nice setup heading into Q3, or as we come now to the closure of Q3. Toast and Dutu were hot. Ended up losing probably 30-40% on that position. Other names like CoreWeave. CoreWeave's a different scenario. It's still a part of the AI narrative, and I still really like the name long term, but I think I was off on my timing there. So I'm kind of allowing myself a little bit more grace period on that position by kind of just expanding out and eliminating time almost as a factor in the potentiality of it. So that's kind of where I'm focused on now, finding ways to eliminate time from the probability and the ability for me to be wrong in these setups. A lot of times, like this camera, my phone's sitting on a monopod, right? It's like one thing vertical sitting up, but is 3 prongs on the feet. I think that's kind of like just like how I also approach the markets, with 3 kind of criteria of like, all right, the first criteria being market sentiment, right? This is where the totality of the market, like, oh, are we fearful? Are we greedy? Also, macroeconomic news kind of feeds within that sector of my grading of the market, or my grading of a position. And that's kind of like where we sat, right? Where we sat below in April, the tariff lows was major market uncertainty. Market sentiment was very negative. And when market sentiment is negative, it's so very hard to fight the stream, to find trends that can push you up. I tend to either sit on my hands and not really put any place on anything, or trim some of the exposure, the positions I do have, or really just sit there and weather the storm. Or maybe even do some light hedging, but even the hedging piece where you're trying to like make money on the downside gets super technical, super difficult at times, where sometimes I don't even do it too much, because I'm not that good at it, at least not yet. I mean, I should definitely practice it more, but just with everything going on right now, I think it's best for just me personally to try and figure out just how to reduce the risk beforehand. So if market sentiment does go against me and things just aren't looking the best all in all, I just figure out how to reduce the risk there, right? Where if market sentiment is negative in a position where I may be generally down 20%, maybe I'm positioned strategically in a way where that 20% down or that overall downside ends up being a 10% or a 15%, something more manageable even, just so that it's not too taxing on the mental side of things as you open up your brokerage and you try to make positions or you try to see where the landscape is, and it just feels gutted because you see your account in the red, right? So that's the main thing. Within that pillar, the market sentiment pillar, there is also like just the fundamentals of the company. How are they, right? It isn't something that makes sense right now within the market cycle. So something that's recently happened was that the Fed has cut rates 25 basis points. I was hoping for 50, but whatever, didn't get that. We got a Fed cut, and this whole entire rally, I mean, not entirely, but like maybe the last month or so has been on the anticipation of another Fed cut. Basically meaning that cash is a bit easier to borrow and such, and it's gonna be good. But the markets have anticipated that so much that we've kind of priced in that cut already. So now that the cuts occurred and we're starting to potentially see the implications, we recently saw mortgage rates take a little dip recently. That was awesome. Well, I mean, like, we'll kind of see from here. They're saying they're gonna cut some more. I don't think the market fully priced in the more because we don't know what more is. Like, is more 50, 2 more cuts before year end? Or is it, just this one cut and we don't have anything until year end and then maybe we get some Q1 2026? Like, we don't know what that looks like. And I think the market hasn't really priced that fully in yet. So that's going to potentially be some tailwinds that we can see over the upcoming weeks. Maybe more data comes out where the market starts to perceive more that the Fed's looking to cut more, maybe cut shorter term than opposed to maybe into next year. They also said that they're looking a little bit less on the inflation data and more on the job market, because right now the job market is not looking too hot. A byproduct of AI and a byproduct of the economy not really looking good as well. That's another thing too. The economy is completely separate from the stock market. And I'm going to keep it a buck with you. The stock market is perception. 8 times out of 10, the market is about perception. The masses perceive that this asset is worth X, or in this case, maybe 2X or 1.8X, right? It's perceived to be worth that, but as of right now, it's currently X, right? So as the market continues to perceive that it's greater than what it's currently priced at, then the asset generally in turn tends to increase. And then what throws fuel on the fire are the news cycles, right? This company's partnering with this company and they're doing this, and this company signed a $6 billion deal with Google, and this company's, NVIDIA bought a stake into this company because they're thinking that this is the next thing. And like, you know what I mean? That's what fuels the news cycle. So on a day-to-day basis, that's what's important to be able to potentially find some trends and be able to catch a trade on the shorter term even. When it comes to the longer winded breadths of positions and of the market, it's about the market, it's about the economy, and there'll be blips and moments where they have a positive correlation, right? And they're kind of doing the same thing. And there'll be moments where there's a negative correlation where the stock market's maybe, deteriorating and the economy seems to be getting better because that they just seem to have that cyclical or like lightly different relationship. And then in that same breath, that is kind of the totality of when I say with the 3 pillars of the market, market sentiment. Do things look good right now? You know what I mean? Is everybody fearful? Are they greedy? That within itself is a major component. And I usually start there before we go ahead and enter in a position. That's when I get into now the micro, right? What is the underlying asset doing? How is it? Is it CoreWeave? Is it, as you probably could tell, CoreWeave is definitely on the front of my mind right now, right? Is it MP? Is it Applied Materials? As of right now, I believe the main 3 themes this year are gold and gold miners, the individuals that dig up the gold for us to consume and put in our jewelry and enjoy, or in this case, really the main reason why gold is appreciating so much is the fact that the US dollar has decreased tremendously. And gold has found its way as like a reserve, back in the forefront of people's minds as a reserve currency. Like, if I have $1 million to the side, I don't want to sit that in cash and have that deteriorate and the buying power deteriorate, especially with the rate of deterioration right now. It's too much. So people are flocking to gold in that way, in the same way that these central banks are also buying back the gold that they sold at 300 an ounce, decades ago to go buy U.S. treasuries, because that was a better preservation of their capital back then. But now they're realizing, hey, gold itself is actually the real main winner here. Second, the AI narrative is the major appreciator this year, I believe. And then rare materials as well. We have Trump arguing with every single nation that we get these materials from with China, with magnets and so on, that a lot of times that at least this year the industry has done extremely well, because now we're investing in the ability to get these materials ourselves. Like, look at the deal that happened with Apple with the Corning glass scenario, vouching to say, hey, we're gonna focus on that. I'm also hearing recently that we have Trump potentially announcing a 1-to-1 import rule, that per chip, right? Per AI chip. Like, hey, if we import one, we have to have produced one here in the States. Since that moment as well, the US has bought into Intel. I believe they own 5%. Don't quote me on that. I don't remember. They own the United States of America own a piece of Intel. That within itself is also insane. Unprecedented stuff. Other announcements have come forth saying that, all the money that's made, sorry, not all, but 15% of the money that's made in China from these chip companies like NVIDIA, they need to give it back to the States. They need to give it back to the US government. And this is all a part of, kind of Trump's plan to bring manufacturing here, to focus on us. And then other sectors like, energy too. All the energy that's being used for AI, it was a sector that was just, a sustainable sector, cash flow positive, of course, right? But they haven't put much growth behind it because the demand for energy hasn't increased dramatically in the last 10, 15 years, 20 years. Until really now, like, we were able to compute perfectly fine pretty much without major energy disruptions. And now we have AI, where our energy needs are dramatic at this point. So we have these major themes. We have gold, flight to reserve currency. We have AI, the growth sector that's actually pushing things and, kind of shaking up the space. We have energy. Just spoke about that one in its use case and how the energy demand has increased dramatically. Rare materials, magnets, glass, production case, like a lot of those bits and pieces that, Trump's trying to push and put US first, right? And because of that, a lot of the US-based companies have gotten a lot of love and gotten a lot of traction as of recent because of that. And then maybe financial sector. Like, the financial sector has done really well as well. We've seen banks take off, especially with the fact that rates, now we're kind of in an easing cycle again, it seems. Those major sectors have done really well so far this year. And some of the bits and pieces that we saw are something that's really important to me, right? So when I said rare materials and magnets and stuff, I think MP. Oh, another big sector, uranium. Oh my gosh. Trump has been also big on this, where he's, we're trying to push into this sector of, the energy. I guess that kind of goes into the energy thing, but just a little bit different. Maybe we say like uranium as like an energy, supplier, right? The picks and shovels of energy kind of. And then we also have the fulfillment people, the companies like Bloom Energy, the companies like Next Era Energy, VST, Vistra, those names, beautiful names in terms of the application, the US strategically investing dramatically in them, setting policies and setting the tone as to, what can be done with those companies. That's been huge for them. Those names are up really well year to date. Names like UEC, names like UUUU. UEC to me, and I'm pretty sure I've mentioned this as well in other integral posts, as well as some other content even, but UEC has been, the number one producer of uranium in the United States, in the sole base fact of the United States, right? I think they're based out of Texas, and they have some bases in Wyoming, I believe, as well. And they do have some in Canada, but mainly they're based in the US. And that's a major component as to why I'm heavily invested in that company, because of Trump's focus on US based, US soil, US. And then obviously AI names. We have Oracle coming through with huge, massive gains year to date because of their database and their cloud services that they provide to everybody. Google as well, the name that was supposedly, eaten up by AI, has found its way back to all-time highs because people completely underwrote Gemini's capabilities wrong. And then NVIDIA, of course, come on, we know that already though. Like, that's not really much anything new. So that's what I'm looking for. I'm looking for that when I think second pillar, okay, micro, what exactly is happening with that one company? The chart, how is it setting up? Are we on a parabolic run up? I don't like to buy those. I really like to try and wait for some form of a correction, some form of calmness within the story, right? Because that's when people become more rational. Things start to make more sense in totality. And then I wait for the kicker, options flow. And I've talked to you guys about options flow, I'm pretty sure before, like to get a gauge as to positioning, how far can it run, when can it do that? Because in options, there's these two variables that are super, super important. Strike price, which is basically the dollar amount that these shares or that the contract can be executed at, where you can buy or sell at that strike, the 100 shares per contract. So it kind of gives you a gauge as to where people perceive that the stock price can go. And then the time, there's an expiry on the contracts as well. So then that gives you the other angle. When potentially can it go to the strike, right? Whether it's a call side or a put. So those three main pillars: market sentiment, overall market, macroeconomic things, fear, greed. Then we got microeconomics. How is the company doing? How is the perception of that company doing, right? Is it something that's being, increased upon? Is China continually buying more and more gold through their central bank, right? And the perception of that. Is it on a potential bull run to continue pushing up and it's kind of stretched in a way? Or is it, or has it calmed down recently or not even run at all yet? And maybe the sentiment in the market is about to make a shift where people are saying, oh, this company's down and out, down and bad, and then now the perception shifts. And I think a really good example of that is actually Intel. The perception has shifted on Intel. I don't believe they're making much more money than they were 2-3 months ago, really, right? But as of recent, US stake, they've reached out to other companies. NVIDIA has a stake, I believe, as well in Intel now. There's this big shift in the belief that we want our chips here in the US, and because of that, Intel provides a strategic, great placement to have that. So because of that, they've been beneficiaries of the fact that this shift is necessary in the market's eyes. And this is where it starts to get into the technicals, where I'm not really showing you now, but with charts and with the graphs that I show you, it becomes a compilation of all of this, really: market sentiment, individual stock sentiment, options flow, all of it. It's shown visually in the charts, the technicality. It's beautiful, really. And then options flow. Once you start to see people pile into names aggressively, shorter term basis, maybe longer term basis, you get to see, okay, the market's positioning here for this. I wonder why. And that gives you a heads up to say, oh, let me go research into that. What is that company potentially doing? What news could potentially be coming out soon that can change that shift and change that sentiment to actually appreciate or depreciate the stock's value? Those are 3 pillars. And that's pretty much it for right now. I think that's enough for right now. I do want to give you guys some more of these videos. So if you do like and appreciate a bit of these, let me know. Until then, this one's a long one. Agent out. Peace.